Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for October 29th, 2017. And I don't even know where to start. We have so much to talk about this week, and how I'm going to keep this video short and concise is going to be difficult. So before I get into it, we want you to take a trial of ForexAnalytix. It's only $1 for 10 days and you can try it out, but at the same time you can download the mobile app and get all of our notifications and push notifications right to your mobile phone. Matter of fact, we have a new app that should be out at the beginning of this week. We've already applied for them in the App Store and the Google Play Store, so they're just some minor updates, but updates nonetheless as we continue to improve our product offering and our services just for you, and for you to try it out. It's just $1. So make sure you download the app and make sure you try us out. Okay, now that I got that out of the way, let's talk about this week, and well, the week that was and also the week to come. The week that was, the dollar, that was the predominant theme of the dollar. I mean, if you look at the dollar index, we are in the process of trading out of an inverted head and shoulder pattern. You know, the real big deal to the dollar index, and I think this pretty much sums it up over the last year and a half. The beginning of the year, when we changed administrations here in the US, the dollar looked like we're going to break out. It peaked right at the beginning of the year, right actually on Inauguration Day. The dollar started lower when Donald Trump was inaugurated, and it's been going down ever since. Now the dollar has turned the corner, but what's interesting is we had a false breakout to the upside. Now we've had a false breakout to the downside, suckered a lot of people in on the short side. Now the dollar is rallying. Technically, the dollar is a little, we could say it's not overbought relative strength wise, but we did hit 161% extension of the last, well, you can see the right shoulder that was developed. You know, it was developed perfectly actually via a trend line, the right shoulder. It was gorgeous, and it actually broke out. And I was very skeptical about the dollar, but you can see the dollar is clearly trying to make its way higher. Now, the good news is when the dollar, or if, I should not say when, if the dollar comes down and tests 94.25, that's going to be a good pivot to reestablish dollar longs, especially if you're along the last couple of trading sessions of the week. We did hit 161% extension. You can see that 95.21 level, and the candle that you see there on the dollar index is not a pretty one. It's we closed the week we closed Friday with a, that's a shooting star. If it was a red body, it could be a gravestone doji. You could call it a pin bar, whatever you want to call it. That long upper wick suggests that buyers got stuck at the highs, and they're probably going to come back in and sell a little bit. There's obviously some news about who's going to be Fed governor, the incoming Fed governor, as Janet Yellen's tenure expires in February, and a lot of people are speculating that it might be Mr. Powell, and then if that's the case, it's just more of a continuation of Janet Yellen, which will be more of a dove. And if that is truly confirmed next week, which we're expected to get that confirmation of Mr. Powell, if that happens, then the dollar might pull back to the breakout point, which again could allow for a better entry for longs for those of you that are looking to do so. Now, also keep in mind that there's central banks of the yin yang, yeah, I said it, yin yang, that are meeting this week. We have the BOJ on Monday night or Tuesday morning in Japan. We have the FOMC. That's going to be on Wednesday, where the Fed's not expected to make a move on interest rates, but I think there's about a 85 or 90% probability that they're going to move rates higher in December. But we'll be looking a bit further out after this meeting to see if the Fed is more expected to continue to raise rates or slow down the pace of rate hikes going into 2018. We also have Super Thursday on Thursday with the Bank of England, and the Bank of England is expected to raise rates as well. Now, let's talk about the pound really quick, because I actually have the chart pulled up over here because there's a couple different viewpoints about the pound. Let's take a look at it now. if you use ForexAnalytix, the benefit of using ForexAnalytix is having multiple types of analysis, whether you're talking about Elliott wave analysis, where Gregor Horvat looking for an eventual breakdown of the pound. You have a harmonics analysis on the A, B, C, D, which would take us lower towards 130.50, and then also you have basic analysis where you can, and then candlestick as well, and macro analysis. I could mention them all, but where we have different viewpoints. Now, I want to point out the pound because well, first of all, Mark Carney has signaled that he was going to raise rates and has chosen not to do so before. But, there are a lot of people on the fence about should they or shouldn't they raise rates, and they are expected to raise rates. So the question is, will they? And then if they do, are they going to signal that more rate hikes are to come as economic data could be supportive of that. But we have the big uncertainty of Brexit. Now, what you'll notice here is a near-term triangle that has been broke to the downside, or tried to, we kind of closed back above it, which could give us that false breakdown. But if you look at the longer term charts, and this is one thing that I want you guys to see, is this is the weekly chart, and we are really contained by this multi-year trend line. You can see it, that comes in. That really backed us off of the 136 test. Now I'm going to take it over to this this live chart, if you will, and you can see there's actually another trend line that comes underneath that isn't on ForexAnalytix, because we have different viewpoints. There are different analysts that upload their charts. So I wanted to bring you just a slightly different view, because if you go out to a weekly chart, you have that multi-year trend line once again. But if you look at down below, we have a nice strong trend line down below, which actually gives us a symmetrical triangle, which means to me, and this is the same analysis that you would see here on the harmonic analysis that was uploaded by Nicola Duke. You'll notice that she has that trend line as well. This move to 130.50, or 130.25, or somewhere down in this neighborhood above 130, is the same trend line that you'd see down here. Now, if we pivot off of this 130.20 level strongly, that means that this triangle, this symmetrical triangle that you see here, is still building. Now, obviously we're in very bearish territory, but as we work our way through Brexit negotiations, is most of it factored in, or is there more pound weakness to come? I don't necessarily know that I'm equipped, nor is anybody else, to really answer that question. I think we have to really watch price action to make that determination. But I'll tell you, while we're above 130, I would be very cautious on being on the short side of the pound right now. Now, if we get below, this 130 level, I think that really exposes these lows, or back down to this consolidation in the mid-20s. It is entirely possible, but there's also some other pretty important charts that you have to pay attention to. Now, as you guys know, the euro dollar has been weak, and the euro dollar, frankly, it looks like we could continue to weaken because of maybe this situation in Catalonia and in Spain, where it could maybe accelerate, as the Catalonia is what most economists suggest is over 50% of Spanish GDP. How intense does this situation get? Well, if you have a euro that's weak, and you have a central bank in the UK that actually raises rates, and maybe the end of this week they signal that they're going to continue to raise rates, well, now you have the euro pound currency, which, this is a weekly chart, the euro pound currency, which is actually just about ready to test that multi-year trend line. But more importantly, we have this double top. You see that double top and false breakout? Whenever you get a false breakout usually leads to a breakdown. That's because so many traders got sucked into this move. Now, obviously, we saw the breakdown happen, but now we're at a very precarious situation with the euro pound. If the euro pound breaks through this trend line, well, that would signal that the pound is gaining strength. Now, I use the euro pound from a cross rate perspective to help gauge how I'm going to trade the pound dollar, or anything pound related for that matter. The euro pound is probably one of the most liquid currencies in the currency market. It's you know, if you look at like the euro dollar, or you look at the pound dollar or the dollar yen, those are very liquid currencies, two major economies with the liquidity factor. You use the euro pound as a very liquid currency. It's one of the most, you know, highly traded currencies in the FX market. Well, when you get a major break in a big cross rate like the euro pound, that may suggest that the pound is going to gain strength against other currencies. And so I would be very nervous about being short the pound anything if the euro pound starts to break down. All right, that goes to that also suggests that you got to be very careful with any euro dollar currencies. Now, I do want to talk about two other currencies really quick, and we have non-farm payroll at the end of the week, by the way. It's to make it all just a little bit more complicated. I want to take you over to the dollar yen, and what you'll notice in the dollar yen is that we have a major high that looks to be formed here, and you can see that there's really a triple top that's set up. But let me take you over to the dollar yen over here, and I want to show you the longer term setup that I have drawn out. And here's the dollar yen, and you'll notice that you want to talk triangles here and consolidations. This is I mean, I'm pulling you right now, you know, several years worth of data. This is the daily chart of the dollar yen from a risk reward perspective. And I know I talked about this last week. Set up for a short, you know, shorting the dollar yen up here around 114, your risk is really defined. It's above 115. But if the dollar yen breaks down, then it suggests that we could move back to 110, maybe even lower. And so when you have a setup like this, you know, that's a big deal. So if the dollar yen breaks down, you know, maybe because of non-farm payrolls, or maybe because of the bond market reaction, and let me take you over to the 10-year really quick, which I also think is a very interesting chart. If the 10-year treasuries, if they bounce, which you can see we pivoted right off of a 618 retracement off of a big consolidation, and we had a false breakdown. If bonds bounce, that means yields are going down. If yields are going down, the dollar yen might go down. Well, then you have the dollar yen going lower, but also you have the potential of the, let me find it, don't go anywhere, I'm almost there. Okay, the euro yen, which looks extremely dangerous with a possible double top here. So, you know, there's a lot of puzzle pieces to put together, but we were talking about maybe the weak euro, maybe a stronger yen. And you know, one other thing, I mean, let's just do this really quick while I've got you here. This is the dollar yen. Let's compare it to the Nikkei. And you're going to see this big divergence between what has happened with the dollar yen, okay, and the Nikkei. The Nikkei has rallied, and it rallied substantially. You know, the Nikkei is going to find a top. It may be 20% from now, but whenever it finds a top, chances are it'll come back down again, but it's going to drag the dollar yen, which is typically very well correlated with it. There's a lot of people that are just long the dollar yen or short yen based on the performance of the Nikkei. They'll be forced to buy back yen or force these yen pairs back down again if the Nikkei does eventually find a top. So that's something that, you know, has been on my radar for the last couple weeks, and nothing's really happened other than the dollar yen's, you know, grinded up towards the triangle resistance. But if we don't break out, you know, soon in the dollar yen, we don't break above that 115, chances of it really pulling back to the bottom of the triangle is quite high. And those are really the things that I'm paying attention to this week. Now, if you guys have found this video helpful, please click on that little thumbs up button on YouTube, because that little thumbs up tells me that you guys really like what we're giving you, and the content that we're providing, and it really, encourages myself and the rest of the team to continue to deliver you great content, especially the free stuff that you see here. So make sure you subscribe to the YouTube channel, because we have so many great interviews that Dale Pinkert posts each and every week. That you don't want to miss those. So if you're subscribed to our YouTube channel, you'll get those notifications. Guys and gals, I hope you have a great trading week this next week. It's going to be a busy one with all the central bank meetings, with all the with non-farm payroll at the end of the week. It's going to be such a busy week. Just trade carefully, be safe, and I'll look forward to seeing you next weekend on the next Week Ahead video. Thanks so much for listening.